Hello, everyone. Welcome to the stock-specific class for Thursday, September the 2nd. I want to start off by apologizing to those that tried to attend the live session earlier today. I had some computer issues that caused us to get started a little bit late, and then about halfway through the class, my computer decided to restart itself. And so it wiped out the recording of that class. So I'm doing just a recorded class right now for everyone that we can hopefully get posted to the YouTube channel so that you can get caught up with what I talked about today. I'll try to remember as much as what I talked about before that previous class got ruined. But I can't promise I'll be able to remember everything I talked about. I don't usually go off of a script or anything like that. Just a few notes. And so anyway, let's get started by taking a look at market conditions. The market's closed now, but it was basically flat. It's been basically flat for the last few days. I think a lot of that's in anticipation of the jobs report that comes out tomorrow. What happens in that the jobs report numbers there could have an impact on what the Fed decides to do, or at least what the market perceives what the Fed might do, and that could cause a little bit of volatility. Now, there were some bearish kind of reversal candles today on the indexes. We'll look at those here in a second, and it could be a sign that that traders are a little bit nervous about what those numbers might mean. The market is in kind of getting into an overbought condition, which we'll take a look at here in just a second. And because of that, it's going to be a little bit nervous. So when the markets are extended like that, sometimes people start to look for reasons to sell or to take profits. And it could put a little bit of sell pressure on the market. And what that tells me ahead of time to that report coming out tomorrow is that if it's not, that report is in any way worrisome for the market, we'll probably see a little bit of a near-term sell-off on that. I don't know how big that will be. I don't expect a big correction just yet, as we'll see in these direction alerts. But we could get a little bit of a kind of a profit-taking sell-off, which could be good. To allow for some new opportunities to get into new trades. But it's also one of the reasons why I'm going to tighten up stops in the portfolio, or I did tighten up a lot of the stops. I'll go through that. I'll go through those adjustments I made pretty quick as I go through that section before the computer decided to reboot itself. But anyway, as far as the direction alerts, we're in kind of that extreme area of the momentum. Brett, it backed off a little bit with a little bit of the softness of the market the last couple of days. It moved out of that high range back into trending. This is one of the reasons why I'm not expecting a huge sell-off yet. I think that will, although I don't expect it to get all the way to the far right side of the extreme range, I think it'll get closer to the right side of the high range, maybe the left side of the extreme range, before I might expect a bigger correction in the market, but it doesn't have to. I mean, it could, if there's news that comes out that causes the market to sell off sooner, that can always snowball into bigger things. But it just doesn't have a feel just yet of panic selling about to take place, and usually that's fueled by confidence in the market, the people that are so confident that things aren't going to go down that it takes them by surprise. And maybe that's what's happening. Maybe I'm the one that maybe I'm the trading crowd right now, and I'm just not seeing, and I'll be the one panicking if it starts to turn. But usually it's a group that the whole market will kind of have that feel to it when it starts to reach those extreme ranges. And there's enough uncertainty right now. We're in more of a state where we're climbing that wall of worry. It's very healthy for uptrends when there's worry in the market. People are worried about things taking place because it allows it to just kind of melt higher or grind higher in those types of conditions. And I think that's more of what we're seeing right now. Sentiment has backed off a little bit, but it's still in the high range and wouldn't take much to push it into that extreme range there. The other sentiment indicator here had already reached the extreme range, but it's backed off a little bit with a little bit of the weakness in the market over the last couple of days. But it's still elevated. It's still close. It could move beyond it, and I would expect it to if the other indexes start lining up. This would probably push a little bit higher beyond that extreme range. But it does tell me too that it could be a reason from here that we get a little bit of a modest pullback if those jobs numbers aren't great tomorrow. Let's look at the charts here real quick. And I can show you. You can see, a little bit of it's indecision day. We did gap up a little bit at the open, and we closed a little bit lower than where we opened. So that's indecision by having kind of a doji look to it, but it's also a little bit more of a bearish indecision because it did close lower than where it opened after gapping up a little bit. We are in an extreme reversal risk on all but the Dow index, as we'll see here in just a second. We're not at the far right side, and we don't necessarily have to, but that is something that concerns me going into this news event tomorrow. We are in a little bit of a overbought state that where we could see a little bit of a pullback there. Again, if those numbers aren't in line with expectations. The Dow has been mostly flat for the last week and a half. It's not in the extreme reversal risk, but the other indexes are. If you look at the Qs, and the Qs had a bearish reversal today, opened higher, closed lower than where it opened. It's in the middle of that extreme range. I tell you what, though, what to look forward to if the news is good tomorrow and the market reverses this kind of bearish reversal and pushes forward, it could quickly push us into that extreme range where we might expect a bigger correction. I've talked about this, that September tends to be one of the more bearish months of the year for the markets. If they do get into that overbought condition there, I think I definitely would be taking profits and reducing risk in the portfolio and taking more defensive measures at that time. But again, like I said, I don't think we're quite there yet. The Russell 2000 on its run it's had, and it had a pretty decent bullish day today. It did back off a little bit at the highs of the day, but it's moving to the right side of that extreme reversal risk. But despite that, and remember, just because it moves to the right side doesn't mean it can't become even more extreme or more overbought. One thing to look for here is do the markets get overbought and maybe the Russell ends up possibly breaking out to a new all-time high. It's been in the sideways range for a number of months now. It's been lagging the other indexes. But these are things that I'll start to look at if we start to hit that those extreme levels. Remember, when you get into those conditions, then you want to look for near-term reversal signals. Kind of what happened today with a little bit of a bearish reversal candle, something like that. VIX spiking up with the market moving higher, something like that as well. Today, we did see the VIX. Let's pull up the VIX here. Did see the VIX have a little bit of a bullish reversal candle. It opened lower and closed higher than where it opened. Again, that's not a great sign, but it's not. It's also not saying that the market has to come down right here off of that. But that is a little bit of a bearish warning sign when you see a bullish candle on the VIX. So we'll keep an eye on that for tomorrow. So again, that's the kind of conditions we're in. In those conditions, I want to be careful about not getting into too many new trades, and then I also want to tighten up stops a little bit, which I'm going to do today as I go through the portfolio. Before I do that, though, let's look at some individual stocks. There's only about three I'm going to look at today. Computer technology. sector, or if this thing can pull up here. Hold on. Let's try that again. Okay, let's go into the computer technology sector here. And under the hold section, I like this MVIS, Microvision 98 strength rank. Let's switch this to signals here. And this is what I just want to put in the watch list. It's come off here, the highs up here that it dropped back from, showing a lot of support in this area right through here. It seems like it's rallying off of that. It looks like it's going from lower highs and lower lows to higher low right here. And this will move up, and it's been moving a little bit sideways right through here, which looks still pretty bullish to me. If it can break to a higher high, it'll definitely confirm that, although this should go to a buy signal before it does that, so I can make a decision to go off the buy signal or wait for it to break to a higher high. The reward to risk looks really good, though. I mean, even if I put a stop right below this recent low, higher low right here, the potential for it to get back up to where it was just a couple months ago, there's huge reward potential for very little risk. It looks like it could be kind of shifting direction here. You had we did have, so going on this downward move here, you had lower highs, lower lows. There's a lower high right here. There's a lower low. There's a lower high, had the lower low, and then it broke to a higher high right here. And then it looks to have put in a higher low right there. So real subtle, but these are just the little clues you look for. And again, you could wait for more confirmation, more of an uptrend to be in place before you consider those trades. But usually I like the reward to risk of getting in very early into these when they're barely acting like a trend reversal, because I don't lose very much if I'm wrong typically, but if I'm right, there's that huge upside potential. I'd like to see, in that kind of context, I'd like to see it pull back from much higher levels like we saw here, to be able to see that potential higher reward for the risk. All right, so I'm going to add that one into, I actually already added that into the watch list. But to add that in, you would click on this little green plus button up here. Select what watch list you want to put it in. I'll put it in the stock specific class watch list, and then save and go to watch list. I've already put it in there, so I'm not going to put it in there twice. But then once you have it in the watch list, here it is right here. I then added an alert by checking this little box right here, and the alert will email me when that goes from hold to buy, gives me that signal change, and then I can make the decision on whether or not I want to get in. The other two stocks I entered, or I put in the watch list today, back to the sectors here under retail. I liked this Capri Holdings CPRI. It's a 94 strength rank, but again, it looks like it has a high reward to risk potential. Now this one, what I liked about this one was it started to kind of stair step up. Here's a move up, here's a step, here's a move up, here's a step. It started to break out right here, and then it had a sharp sell-off and then a sharp rally. So you have this little V-shaped move. Now, when you have back-to-back impulsive moves in the opposite direction, it can often signal a top or a bottom. In this case, with the move down and then the move up, it looks like this could be a potential bottom that was put in down here. And then this pullback here looks more corrective. It looks kind of choppy back and forth, like a little like an ABC pullback. Now, it also had a little bit of a reversal right here, where it was down this low a couple days ago, managed to rally all the way back up. It did close lower than where it opened, which is not the strongest bullish reversal. You'd like to see it come all the way back up and close higher than where it opened. But it's taking place around that retracement zone, that 618 retracement area of this move up. It's retraced a little bit more than halfway, get a little bit of a bullish reversal candle. Now, this is a little bit of a bearish day the next day where it traded all the way up here and then faded a little bit. The sellers pushed the price down a little bit right there. But so there's a little bit of a battle going on between buyers and sellers, and that's what you would expect to see in this area. If this chart is going to start moving higher, this is the area where it would start to move higher, where that retracement zone is. And so I don't have to get in now. I'm waiting for it to go back to a buy signal. Hopefully it shows a little bit more strength moving up as it goes into that buy signal. That gives me confidence that it could break out to a new high out of here and break above that level there. And if it can break above that level, one of the rules of thumb is you can take the distance between the breakout area and the low right here, and you can project that distance upward as a kind of a minimum target of where you might expect that thing to go if it breaks out. And the fact that it's breaking out of this area here, you could take the distance of that correction from that high down to that low and project that distance. So there's a huge forward in that. So there's huge upside reward potential there. Again, it's keywords there, potential. If we can get that confirmation, you can also draw a trend line right through here. It seems to be lining up, some support along that could come into play. So anyway, I put that one in the watch list as well, and with a signal alert to tell us when it goes from hold to buy. And the last one was in the business services sector under hold. And I like this Futu Holdings right here, 93 strength rank. And this is one of the kind of those fintech stocks that have many of those have done pretty well. It's been hammered a little bit, but again, showing some potential for a trend reversal here. Now, one thing I often talk about is the stair step. You know, stocks will tend to stair step their way up and stair step their way down, which is when it alters between impulsive moves, which are the sharp moves up or down, and corrective moves, which tend to be more choppy. So you kind of go impulsive, corrective, impulsive, corrective, impulsive on your uptrends. And when we have downtrends, you have impulsive up, impulsive down. And then you tend to have the choppy moves as they attempt to rally. And that's kind of what I'm seeing here. I'm seeing impulsive, corrective, impulsive. Here's impulsive up, impulsive down. And then notice how this is a little bit more choppy and sideways through here. That's corrective, and then impulsive down, and then corrective, more choppy and sideways. Then you had impulsive down, and then not real impulsive up, but a little bit of a sharp move right here. And then it looks like though we put in a higher low, so at a higher high right here. So we're acting potentially like we could be reversing back into an uptrend. Now, again, it's still really early here, but again, the reward to risk, just a couple months ago, we were all the way up at $181. We're down around $100 now, $105. If I get a buy signal on this, I probably put a real tight stop in right below here, or I could consider down here. But with the way the market conditions are, I'm going to probably keep stops a little bit tighter for now. Try to really keep that risk low. But again, I'm not in this yet. I'm waiting for it to go back to a buy signal. Today was a little bit of a bearish candle today, which is not surprising after a real strong day we saw yesterday. But this is one that looks like it has that potential to be reversing. And another thing to look at too is if you look at the long-term pattern here, you had this large rally up right here, and then notice how this looks real corrective, real choppy, kind of like a large ABC correction, which is basically retraced start all the way down here at the start of that move, about 50% of that entire move up, maybe a little bit more than 50%, but this is the area where it would find support and start moving back up. If it's going to start resuming the uptrend, and this stock has been a flyer, it's been a pretty popular stock up until the last few months where it's kind of gone through this correction. But if this is starting, this is the area where if it's going to start a new larger uptrend, this is where it would start, is in this area. And so all I'm doing is looking at those real subtle clues. We have that stair step down, looking like maybe we're starting to stair step up and reverse that trend. And then I'll manage it. When I get that buy signal, put a tight stop in, big reward potential for very little risk. So that, and it's not a bad idea on your trades to back out, look at a bigger picture. I try to do it as often as I can. Sometimes I forget, but sometimes when you back out, you'll either see, maybe it doesn't look as good when you back out and it warns you not to get into that trade, or it looks really good like this one does in this case, and makes you more confident that you've got a good trade candidate. Again, no guarantee it's going to go higher from here, but I like the way both the longer term chart and that shorter term price action looks right now on this one. So I put that one on the watch list. And so now let's go through the portfolio here, and I can show you some of the changes I made. We ended today up about $2,100 on the portfolio. Again, it's been fluctuating back and forth a little bit, but I feel like now with, we could start to see that jump pretty rapidly. And we're able on some of these trades to put our stops in a profit area where we're already at a profit. But some of the adjustments I made on PFMT, I can't remember what the previous stop was. Well, let me pull up the chart here. I might be able to remember where it is. I think it was down around here. And I moved it up right, pretty close right there. Moved it up to $4.18. The idea here, let me switch this to candles. The idea here is if we do get a market sell-off and these charts start to, if they do reverse and start selling off, I want to reduce that risk exposure. So it means that by raising those stops, I could end up getting out at a smaller loss, or in some cases be able to lock in the gains that we've already made. And I'm going to teach you another technique you can use with some of these, especially some of the ones that are getting into kind of that extreme reversal risk. There's a technique you can use that can help you preserve a lot of the profits you've already made. I'll teach that to you here in just a second. But move that stop up to 418 on PFMT. RM, I didn't do anything on this one. Our stop is right below here, and I didn't feel any need to, there's really nowhere I wanted to move that up to just yet. MSTR, we did move this stop up to 640. I can't remember where it was at before. Let me bring it up here. I think I had it. I think I had it right below here, and I think we moved this one up right below this area here to 6. Actually, maybe we did keep this one down. That's the problem with I made the adjustments and then trying to remember where. Okay, so I moved it up below. I did move it up below this, so we must have had it down here a little bit further. I moved it up to right below here, and oh, I know, I was going to move it up right into here, but I didn't like the bearish candle today, so I wanted to give it a little bit of room to reverse that. So yeah, I moved the stop up though right to this area right here, right below there. But I do want to move it up to this area soon if it can start to move back up, because you've got a lot of support in that area right there. By the way, on RM, we got in at 51.31. I moved the stop up to 54. So we're locking in gains there. We're protecting gains that we have. If we get stopped out, we'll be able to hopefully keep the gains that we've made there. This one, we moved it up. We'd still end up with a loss on PFMT if we got stopped out, but we've reduced the loss, though, the loss exposure there. MSTR, moving that up to 640, that would still be a loss, but again, reducing the loss exposure there. On Mara, I moved the stop up to 36. I'll show you that here in a second. So that's protecting profits. We got in close to 31, and our stop is at 36. And this is where I can kind of teach you a technique that I like to use. So I moved the stop up to right below this area right here, 36, right at 36. A little bit of a correction there. You also have these highs right here that can serve as support. We had a little bit of a bearish reversal candle today, so this thing could pull back a little bit. Now, there's a shorter term, if you really want to protect your gains that you're in, there's a technique you can use. It's not perfect, and it could get you out a little bit early, but I usually use it in a specific set of circumstances. Either I'll use it if I've got some big gains and the whole market looks like it's ready to drop. That could draw my stock down for no other reason than everything else is selling. Or when a stock is on these little bursts like this had, and it gets into that extreme reversal risk. So I got my stop right up here, but I may stop out of this tomorrow if I get this price action. So you can see we're in the extreme reversal risk area. What this tells me is that the stock has been on a big run here. And when you get into that extreme reversal risk area, what it tells you is that you've got to consider the fact that you got to consider that if you try to get additional gain out of it, it could backfire where you have a bigger loss. You give up a lot of the profit you've made, meaning I may try to grab that extra dollar, have it go up an extra dollar, but remember, when things sell off, they sell off quickly. And what could end up happening is trying to make that extra dollar profit, I could end up having this drop $4, and you end up giving back $4 of your profit trying to grab that extra gain. Now, you don't want to just get out just to get out, although I'll do that. If I was really concerned about the market having a bigger sell-off, we had a bearish reversal candle today, I could have just gotten out of this thing just on that bearish reversal candle alone. But because the uncertainty of that jobs report tomorrow, this thing could get reversed and still go up a little bit higher. I decided just to give another day. But the technique I'm going to use here, and I'll see if I can say it very slowly because you have to make sure you understand it. Very often when these stocks start taking off like this, when you know that really stretched run is done, you'll usually have a day where the stock will close below the low of the previous day. Now, the key words there are close below the low of the previous day, not trade below the low of the previous day, but close below the low of the previous day. So you'd be watching this right up into the market close to make that decision. So if tomorrow, here was the low of today, if tomorrow it looks like we're going to close below the low of the previous day, then I could take that as a signal that this thing could be pulling back. Now, it may be temporary, where it just pulls back a little bit and goes again. But that's why I'm not just getting out because of a close below the low of the previous day. I'm getting out on a close below the low of the previous day in that extreme reversal risk condition. It's already overbought. So the chances of when it closes below the low of the previous day, the chances of it going into a correction are much greater at this point. And another thing to keep in mind is that if I do get out, doesn't mean I can't get back in. Let's say it does close below low of the previous day. I get out. it has just a normal little ABC correction, pulls down into here, then starts to go back up again. Should I re-enter the trade in? Absolutely. If the whole market looks more bullish again, and I could jump back in it again. Now, again, just because it closes below the low of the previous day doesn't mean it always pulls back. We got a close below the low of the previous day right here, and the next day it shot right back up again. Now, the difference, though, is that we weren't in that extreme reversal risk, and that's why I don't want you to do something like this necessarily at any point, just for the sake of getting out. But if you get in that extreme reversal risk, that's a great technique to protect a good portion of your profits, because with our stop down here, if I wait for it to drop and drop and drop, I could give back a lot of those gains by the time I stop out. But again, this also gets back to how much time you want to put into it. This is something that if I'm going to use a technique like that, it's usually because I'm watching it every day. I'm just watching the different phases of each stock to see if they get overextended, and I'm looking for any signal to go ahead and take profits and try to preserve as much of the profits as I can. If you don't feel comfortable with your ability to read that price action or make those decisions, then use something simpler. Use the basic stop losses where you're moving it up after each little step. You could even wait for it to go back to hold or back to a sell or something like that as a reason to get out. But this is a technique I'm going to use on a lot of these ones that have made these little runs like this. I want to preserve as much of that as I can. So this one I might end up, if I do get that signal tomorrow, I'm going to get out of this one. And so we'll talk about it on Tuesday in the next market update, if I can remember. But that's kind of what I'm looking at with this one. ASPN was the next one, and I moved that stop up to $41.85, which was based off of this high right here. So I moved it pretty close. Again, there's a little bit of a step and we've gone higher. I could have moved it right there, but I was getting a little bit too close. But this is another one where now we didn't have a bearish reversal candle today, but if we were to close, if we had a reversal tomorrow and we closed below the low of the previous day, I'm going to go ahead and stop out of that and hopefully preserve profits, because on this one here we're also operating at a profit on. We got in at 37.97. Our stop's at 41.85. We want to preserve as much of that gain as we can. Now, this is another one where I'm also considering that technique because we've entered into that extreme reversal risk area. Okay. RIOT, I didn't change anything on this one. Our stop is right below here. It had a little bit of a bearish candle today. It still could dip a little bit and still be fine. So I decided to leave that there. Now you might say, well, Jerry, this one closed below the low of the previous day today. Could we just get out on that? Well, again, the difference here is that we're not in the extreme reversal risk. No, not even close. It happens a lot in sideways moves where you can close below the low of the previous day, close below the low of the previous day right here, but you're in a sideways move and you would have missed that explosive move. And that's kind of the same thing right here. You got a sideways move, previous move is up. That's why the context of this technique is very important. You gotta wait for. I want to use it when you've started to really make a run. So let's say you have this little run right here. You have a bearish reversal candle right here. When did you get a close below the low of the previous day? Right here. Okay, that would have locked in a good chunk of those gains from there and kept you from this big slide that took place. All right, so we kept that one the same. SGKS, kept that one the same. Now, if this can start to move up, I'll adjust that stop right in this area right here, because that's kind of your sideways range. So if we break out of that, I'll move that stop up. Tesla. I think this is where my computer rebooted on me. So I think we got to Tesla. Our stop is at 645, which is down here. And I was going to move it right up into here, get a nice tight stop. You have this area of resistance, this area of support, this area of support. And so let's see what that low of August 26th is 697.62. So I'm going to adjust that stop to 697. And we got in at 714, so we would still be at a little bit of a loss there, but not much if we get stopped out on that. DDS, I didn't make an adjustment on this one. Now this one, we almost got stopped out. Our stop was at 180. This got down, I think that's right. Let me go back to, oh no, it's at 185. 185, and it went right to 185 yesterday and then reversed. So it came all the way down. The low of yesterday, well, actually the low was 185.90, $185.90. Our stop was at 185. And now usually with stops, I like to get a close below my stop level. That's why usually I'll wait to the end of the day before I go look at where stocks are to make sure they're closing. So even if the fact that it touched that, even if it would have gone below 185 on this intraday low and then came back, I wouldn't have stopped out of that because it wasn't going to close below it. Not to mention that was a bullish reversal candle. It wasn't surprising we're up again today. I'm hoping that, I don't think it's coincidental that it reversed right there, because you have a lot of resistance and support. Resistance back here, support right here. Remember, what used to be the ceiling usually becomes the floor. And let's see if this thing starts to work its way up and starts making us some money here. So close call there, but so far we're still holding on that one. But I'm not going to make a stop adjustment there until it can start moving up higher from that point. We got it at 189. Where stop is at 185. And it's closed today at 196. So we're up quite a bit there from where we got in. And we're not too far away from being able to make that stop adjustment to break even or even to lock in some gains here. MOSY, our stop was at $5.05. I don't think I have a stop adjustment on this one. No, because our stop was right below here. Again, could I close below the low of the previous day? Could I go ahead and get out? Well, again, we're not at that extreme reversal risk area, so I still want to keep my stop below here, because this could just be, look how it's kind of moving sideways here. This could be just a little bit of an ABC correction, might drop a little bit further and then take off again and give me a nice higher low right there. So still and again, this still looks like it's got that bowl shaped move, higher highs, higher lows. We'll see if we get another higher low right here. I don't want to bail on this one yet or get too close there to where I'm not letting it make that move. Because again, potentially, if the trend continues, it can get back up into these levels here. And that's a nice reward for the risk. CAN, I did make a stop adjustment on this one. We had it at $5.30. So I had it down below here. And because of the market conditions, I'm going to go ahead and tighten it up right below there. If it dips below that and the market starts selling off, it's probably going to be retesting these lows again. So I moved it right below that low. The low of that day was, that's August 19th. It was $7.48. So I went about 2 cents below that to $7.46 just to get a little bit below that low. Let's make that adjustment here. $7.46. And again, we got in at $9.15, so it reduces our risk exposure there a little bit in case it goes down. OPRX, I also made a stop adjustment on this. It was at $55.55. I moved it up to right below this high right here to $64. So if we put our mouse over, this is June 25th, high was at $63.89. I just want it to be right around in that area there, so I put it in at 64. Now this looks like it's really close to breaking out. If it does, if it breaks out, you can take the distance from the breakout to this low and project that upwards. So there's a lot of upside potential there. But I don't mind tightening that stop up, because if I do get stopped out and it's just a pullback right here, it goes higher again, I can get back in it, or I could wait for it to break out and get back in it, which is probably more likely what I would end up doing. So we're adjusting that to 64 from 55. Now what this also does is puts our stop very close to where we entered the trade at $64.70, significantly reduces that risk. MTLA, I adjusted the stop from 125 to 140. So I had it down in here and I moved it right up into here. Again, if this could move up even just a little bit higher, I'll try to adjust it even closer right up into there. But for now, we're going to adjust it right to 140. And then I'm not doing anything with the last two. Well, this one I just entered, and I'll show you why I entered that one here in just a second. The HOV, we have our stop down below here. Now, if it can break out, it's looking like it's starting to break out. I'll try to move that stop up a little bit closer, but we could probably make that decision next Tuesday. All right, now out of our watch list, I got the signal. Remember, we got the signal alert on KRUS, but I didn't get in that when I got that alert because I didn't like it was selling off. I talked about this one on Tuesday if you want to go back but it had this, now let's switch to signals here. It gave me the buy alert, but I didn't like the, I didn't like that was on Monday. I didn't like the on the class day right here. I didn't like it had reversed back down. So I went ahead and went back to a hold signal. So I put another alert on it to tell me when it goes back to buy. It actually was at a buy signal near the highs of today, but it backed off. It's still in the hold. So I'm going to wait till I get that buy signal. Again, maybe I get it tomorrow, or maybe I get it tomorrow. If it turns to the buy signal tomorrow, I'd get the alert on Monday to get in. I'll decide what I want to do. By knowing that jobs report and how that's affecting the market, that'll help with that decision tomorrow. If it is going to go back to a buy signal, if it sells off a little bit further, I'll wait. We'll talk about that one later. The other one that's signaled was CEIX, and I didn't like the way it was trading down. But this one is very close to breaking out. I was a little bit concerned that again with tomorrow, I figured that if it breaks out, I can just buy the breakout. If it pulls back a little bit further, I can wait. So I just, who knows, it could really make an explosive move and I might have missed it, but back that, wait a second here. I thought that did, actually, I think that did break out. Is that chart correct? I'll have to look at that. Anyway, I decided to hold off on that one. The other one in that watch list that was this SGOC. This was sitting at a buy signal too, or it was really close to a buy signal. You can see right here. And so I'm still waiting on that one. The one I did end up getting into, hold on just a second here. Was Whiting Petroleum, WLL. It went to a buy signal today. And again, I'm going to start with my stop down. Actually, I think I put my stop in right below here at about 42. That way, in case this ends up being an inverse head and shoulders pattern, there's a left shoulder of the head. If it pulls back to that area there, I would expect it to still hold right in that area and go higher. But again, it should work its way back up to that previous high. And I could start moving the stop up too along with it. But I went ahead and got into this right before the market closed. And then I put that stop in the portfolio again. I put that stop in at 42 initially there. Now this one is in that extreme reversal risk range, but remember I just got in, so a lot of that was pushed into that range from today's solid move today. But I could use that as a tighter stop if it closes below the low of the previous day. I could use that technique because it's in that extreme reversal risk area there. We'll see. We'll see how things go in the next few days. All right. Because our watch list is getting kind of big, I'm going to start booting out some stocks. I can start with Whiting Petroleum, WLL. I just entered that trade, so we don't need that in the watch list anymore. ZDGE. In fact, we can go through our watch list here real quick. I'm going to get out of this one. This one has gone back to a sell signal. This was, we've watched this for a while. It's gone lower there, has lower high, and it went back to a sell signal. I'm going to just boot this one out. If it does start going, it'll show up. We'll see it on the scans, and we can look to put it back in. But I'm out of patience with this one, so I'm going to get out of that one. The other one I'm going to get out of, well, BTBT still looks fine. BNTX, I talked about how this could potentially be like a wave C where it can come down here a little bit lower. I'm going to go ahead and leave that in for now, because if it does complete that and starts to move up, it could be a good one to get into. KRUS, again, that we're waiting for this one to go back to a buy signal to give us confirmation to get in, so I'll leave that one in. SGOC, another one. Oh yeah, see, it did. It wasn't showing today's move. It barely went to a buy signal today, and I was thinking about going ahead and getting in that one. But look at the candle; it's kind of an indecision day. And again, with tomorrow, the uncertainty of tomorrow, I decided to wait. It'll give me the email tonight because it went to a buy signal, and then I can make that decision when the market opens. If it sells off, it goes back to hold, I'll probably just throw it back in to the watch, or leave it in the watch list, and then redo the signal, the alert, to alert me when it goes back to buy. But that one's real close. BLMK, again, another one that's real close, but hasn't given a signal yet. I'm going to kick TWI out, and the reason I'm going to do that is just the impulsive corrective type behavior. When you're an uptrend, you get impulsive up, corrective, it's stair step up. When it looks like you're going down, you get impulsive down, and then it'll look corrective on the rallies, and then you get impulsive down. And that's what it's looking like here. We had this impulsive move down. I was already a little bit concerned about it. It went to a lower low right here, and then since then it's been just choppy. And then now it's starting to look like it's moving sharply lower. I just don't like the way this looks right now. It just looks more like it wants to retest these lows than start going higher here. So I'm going to just go ahead and boot this one out as well. I'll do that here in a second. WLL, I got in. CEIX. Oh yeah, this is another one that I thought it had broken out today, and yeah, it did. It broke out on that move today. I decided not to chase it though. And I think it was a lot. Oh, because it was already in the extreme reversal risk on the move to get in. And a lot of times you'll get these breakout moves, and then they'll come back and retest the breakout. So I want to just kind of be patient on that, and especially if the market sells off a little bit. This might come back to that breakout area and give us a better entry. I'll leave that one in the watch list though too. BNGO, again, still hasn't gotten the alert yet, so I'll leave that one in. LXU, same thing. Pattern still looks good. MVIS is what I entered today, put in there today. CPRI I put in today. And Futu. All right, so let's go to watch list and boot out ZDGE and TWI here. And that way we're not letting this thing get out of control. All right, I think that does it. Hopefully this recording will be fine. And I think I remember most of what I had in the update I did earlier today. But anyway, have a great weekend. We'll see you on Tuesday for the market update class. Bye now.